Imagine downloading a trading app for the first time. You watch a few YouTube videos, open social media, and suddenly it feels like everyone is making money. Someone turned 500 pounds into 5,000 pounds. Another trader claims they quit their job after only 6 months. Charts flash across your screen. Green candles, huge profits. It all looks surprisingly simple. Let's imagine someone named Oliver. Oliver had never traded before. He wasn't trying to become a millionaire overnight. He just wanted another way to grow his money. So he opened his first trading account, deposited a few £100, watched a couple of tutorials, and placed his first trade. Within minutes, he made money. Not much, but enough to feel something dangerous: confidence. He started thinking, maybe I'm actually good at this. Then came the second trade, another win. By the end of the week, Oliver wasn't thinking about risk anymore. He was thinking about how much more he could make if he simply traded bigger positions. If you've ever been curious about trading, or you've wondered why so many beginners lose money despite having access to more information than ever before, consider subscribing. On this channel, we explore the psychology behind money, investing, and the decisions that quietly shape your financial future. Here's what Oliver didn't know. The biggest danger for a beginner isn't losing their first trade, it's winning it. Because early success creates the illusion that trading is easy, when in reality, the market hasn't taught you its hardest lessons yet. And that's why so many new traders make the exact same mistake. They believe trading is mostly about finding the right strategy, but the longer Oliver stayed in the market, the more he realized that profitable trading had far less to do with charts and far more to do with controlling the person looking at them. Oliver spent weeks looking for the perfect strategy. He watched videos about chart patterns, read articles about indicators, downloaded tools that promised to predict the next move. Every creator seemed to have a different system. One swore by moving averages. Another insisted price action was all you needed. A third claimed a secret indicator could identify winning trades before they happened. Oliver thought the reason he wasn't consistently profitable was simple. He just hadn't found the right strategy yet. But after trying one system after another, he noticed something strange. Every strategy seemed to work sometimes, and every strategy failed sometimes. That's when he discovered a truth most beginners don't want to hear. No strategy wins every trade. Losses aren't proof that your system is broken. They're part of trading itself. The mistake beginners make is believing every losing trade means they need a completely new strategy. So they keep switching. One week they're trading breakouts. The next week they're trading reversals. Then support and resistance. Then momentum. They never stay with one approach long enough to understand whether it actually has an edge. But there was an even bigger problem: risk. Whenever Oliver won a trade, he felt unstoppable. His next position was usually larger. After loss, he often tried to make the money back immediately. Without realizing it, his emotions were deciding how much he risked, not his plan. Professional traders understand something beginners often don't. The goal isn't to win every trade. The goal is to survive long enough for a good strategy to play out over hundreds of trades. That means accepting small losses before they become large ones, keeping position sizes consistent, and understanding that one trade should never decide your future. Oliver finally stopped asking, "How much can I make on this trade?" Instead, he asked, "How much am I willing to lose if I'm wrong?" That single question changed everything, because successful trading isn't really about predicting the market. It's about managing yourself when the market proves you wrong. And that psychological battle is where almost every beginner eventually succeeds or fails. After a few months, Oliver finally had a strategy he believed in. He wasn't chasing every new indicator anymore. He knew where he wanted to enter a trade, where he wanted to exit, and how much he was willing to risk. But that's when a different problem appeared: patience. Trading has a strange way of making you feel like you always need to be doing something. If the market is moving, you feel like you should be in a trade. If you've been waiting all day, it's tempting to convince yourself that this setup is close enough. That's exactly what Oliver started doing. He stopped waiting for high-quality opportunities. Instead, he began taking average ones simply because he didn't want to miss out. Ironically, the more trades he placed, the worse his results became. That's when he realized something professional traders understand very well. More trades don't automatically mean more profit. Sometimes the most profitable decision is doing absolutely nothing. He also noticed another habit that was quietly damaging his account. After a winning streak, he felt invincible. He increased his position sizes because he believed he had finally figured out the market. Then one losing trade erased the profits from several winners, not because his strategy had stopped working, but because his risk management had. Successful traders know that protecting your capital is the first priority. If you lose half your account, you need a 100% return just to get back where you started. That's why experienced traders often risk only a small percentage of their account on any single trade. They know one trade should never have the power to end their journey. Oliver finally stopped measuring success by how much money he made each day. Instead, he judged himself by something much simpler. Did I follow my plan? If the answer was yes, even a losing trade could still be a successful one, because in trading, you can make the right decision and still lose money. And you can make a terrible decision and still get lucky. The market doesn't reward luck forever. It rewards discipline. And that was the lesson Oliver needed before he could ever think about becoming consistently profitable. After almost a year of trading, Oliver expected one day to suddenly feel like an expert. That day never came. The profitable traders he admired weren't celebrating every winning trade. They weren't posting screenshots of huge gains every week. Most of them were surprisingly calm, because they understood something Oliver had spent months learning the hard way. Trading isn't about predicting the future. It's about managing uncertainty. No indicator can tell you exactly where the market is going next. No strategy wins every time. Even the best traders experience losing streaks. The difference is that they expect them. They don't see losses as failure. They see them as part of the business. That changed Oliver's mindset completely. He stopped trying to make money every single day. Instead, he focused on executing his plan consistently. Some weeks ended in profit, some didn't. But as long as he followed his rules, he knew he was improving. He also accepted something many beginners struggle with. Trading isn't the only way to build wealth. For many people, long-term investing in diversified funds is a more suitable approach because it generally requires less time, less emotional decision-making, and historically has rewarded patience over long periods. Trading can be rewarding, but it's also demanding. It requires education, discipline, and the willingness to accept that losses are part of the process. There are no guaranteed profits, no strategy that works forever, and no shortcut that replaces experience. Looking back, Oliver realized his biggest mistake wasn't choosing the wrong indicator. It wasn't entering trades too early. It wasn't even losing money. His biggest mistake was believing trading was mainly about charts. In reality, it was about controlling his emotions, fear, greed, impatience, overconfidence. Those were the opponents he faced every time he opened the market. Because in the end, the market isn't trying to beat you. It doesn't even know you exist. Your greatest competitor is the version of yourself that wants to chase losses, ignore risk, and believe one trade can change everything. The traders who survive aren't usually the smartest. They're the ones who protect their capital, keep learning, and stay disciplined long enough to let skill replace emotion. And that's the quiet truth almost every beginner discovers eventually. Successful trading isn't about finding the perfect strategy. It's about becoming the kind of person who can follow one consistently.